5, 4, 3, 2, 1. You're live.
Hello and welcome back, ladies and gentlemen. Again, thank you for joining us on this show and this episode. So, today we're going to talk about a big topic. Actually, it's a combination of lots of big topics. So, there's telecommunication, there's internet, there's IT, there's digital technology. So, in essence, what we're trying to do in this next 45 to 60 minutes is talk about technology, telecommunications, a little bit of AI, ML, AVR, cybersecurity, what's going on. We're going to talk about trends. We're going to talk about new capabilities, and we're going to talk about the market. We're going to give a coverage. We're going to tell you what's happening, what you need to focus on. And if you are an up and coming business, again, do remember on our panel today, we have two very powerful men, and they represent startups, VCs, and funds. So it's good to hear their thoughts from them, what they think on the topic itself. So without further ado, I'm going to introduce myself. My name is Terence, and you are now with Latoken on VCTV. The links can be found here, right there. There we go. So again, I'm going to pass it to Tushar for a quick introduction and what you represent itself. Tushar, go ahead. You're muted. Yep.
Thank you, Terence. It's great to be back on the show with you and Karthik, and thanks to Carol as always. So I am, I've worked for companies like Deloitte and Touche, private equity practice, and I've also handled investments at Brand Capital, which is one of the largest funds in India by number of deals. It's from the Times of India Group. I've also handled debt at Systema's Russian company, Systema's India unit, MTS India, where I raised almost $2.5 billion of debt for the company, and have been CFO with this Distribution Logistics. That's a company owned by Guggenheim Partners. In the past 6 years, I'm running my own show with Kansaltancy Ventures. We are a investment management firm. We look out to invest across tech and some parts of non-tech, not big ticket sizes. I also run an angel network called Saffron First with around 38 HNIs, which are high net worth individuals, and some of them based out of India and others around the Middle East and Singapore. And it's my pleasure to be back on the show again.
Great. And good to have you on board as well. I'm sure it'll be insightful from your side. Karthik, I'm sure some of the audience know who you are, but for those who don't know who you are, Karthik, do tell them.
Thank you so much, Terence. And it's 27 shows and counting, as I keep the ticker right updated every time I come on the show. It's been a pleasure to be associated with you guys for a little more than 6-7 months. I think we've done some fabulous work together. I represent multiple businesses. I represent a large retail house based out of the Middle East as heading their e-commerce and omni-channel integration businesses. I am also a part of a VC panel that funds angel and startups in terms of seed as well as Series A, Series B funding. I represent private offices of two large business houses based out of Europe that is actively investing in digital transformation and digital ecosystem. As an investor on my own self, I have private investments or investments in robotics, in health techs, and in fintechs. So that's where I come on the platform to help find the right mix between a partner and an investor.
Brilliant. We are talking about technology, telecommunications, and the works, and I think you will be able to definitely contribute on this session itself. Now, before we start, just a bit of housekeeping. For you out there, ladies and gentlemen, viewing in from where you are, if you are catching us via YouTube, again, do like, subscribe, and give us a thumbs up there. Just tell us where you're watching from. And if you're watching from our main platform itself, remember the links below to all the next shows, even during the holidays and post to next year. Everything is there. Do tag us. And if you want to reach the VCs that you see today or on any of our shows as well, do reach out and we will be that bridge. So again, let's deep dive straight into the topics today. I think it's good to start, because if we look at the entire topic today, it's almost like an evolving definition to what we have when we talk about technology, telecommunications, IT, digital tech. So I want to hear from you guys itself. What do you think, and what do you want to talk about almost on this show itself? Tushar, let's start with you on this one. Help us define the topic here.
For me, the entire journey since I've been watching technology, right from the dot-com burst to 2008, the market stumbled, and now to COVID, has been about the march of technology. So technology has taken us to a different dimension. The stickiness of the smartphone is such that Apple is a $2 trillion company, and people are more, hung on to their mobile phones, and that has created a space for technology to march in even deeper in our lives. So what we are seeing, that everything is to be delivered at the home, in the right time and in a proper manner. And also, uh, it is a big opportunity for companies to be targeted, do a lot of data analysis, because they have so much of data to play around with through the smartphone, that there is a lot of efficiencies in the system, and any company which furthers efficiency or shortens the time of delivery or makes the processes more simpler, more efficient, is going to gain from it. There is a lot of competition out there. There are dollops of dollars available out there chasing any idea which can be the next blockbuster idea. For me, telecommunication in this whole piece was defined by more than $20 billion, which went into Reliance Jio, and from a sector with 12 telecommunication companies here in India competing with each other and bleeding. Like, I've worked for Aircel and MTS, so I know how the companies were bleeding. And this $20 billion which came into Jio, and it became the largest telecom company in India, is a case study about which I would like to speak about as we go further ahead in the show.
Great. Yep, definitely something you can bring up. Karthik, over to you. Let's try to define it in terms of, let's say, products and services within the whole subject that we're talking about today.
So what you've chosen as a topic is actually an evolution omnibus. It encompasses everything that human beings do, wish to do, and would wish to do in future. And that's what Gene Roddenberry taught us in 1969 when they spoke about beam me up, Scotty, or you have injections which are contactless. So that
Right.
takes us back to that era of, if beam me up Scotty is possible, or if a chip that can drive a human mind is possible, then everything's possible. But to put a perspective to technology, technology unfortunately is one of the most unforgiving phenomenon of the entire human evolution. What is relevant today is what matters. What happened yesterday is irrelevant. And that is where even the growth engine of technology becomes a passe. And it is always relevant to understand the contemporary technology trends. And contemporary technology trends, I would break it into four large silos. The first is obviously the data size. We've never seen a data overflow of the magnitude that we see today, wherein today human interaction can be codified into 96 data multiples, including the number of times a human being twitches and algorithms built behind that, or the number of times human being cups and blinks, defining his genome pool. Now, that is one level of data overflow. The other level of data overflow, and the other level of evolution, is where we see is the Internet of Things coming into the perspective. Now, specifically, Internet of the Things is the way we look at building convenience and building connectivity. Typically, we used to walk into a house and switch on TV, switch on lights, switch on air conditioning, switch on the refrigerator. We always wanted somebody else to do it for us, and that's how the technology evolved. Now, instead of humans doing it for humans, can we find a way for technology to do it for us? And the first answer came in terms of your refrigerators and air conditioners, which came in with a thermostat. And today we have reached a level of voice personalization where we can talk to Alexa and make Alexa do things for us. The same Internet of Things has now moved into even e-commerce, and which is where hyper-personalized communications through Google networks are possible to make purchases happen. You sit in your office, you tell Alexa on your Alexa network saying, Alexa, can you make sure that milk reaches my house? And Alexa makes sure through the closest vendor to your house Milk is delivered to your house. You tell Alexa, Alexa, go to my doctor and find my my glucose report. Alexa fetches the report and makes it available and reads and even guides a menu according to you. Now that is the level of Internet of Things that have moved into this space. The next big thing is we are used to seeing things and we are used to perceiving things the way we want it to be. There was always a constant around energy mass constant, which is we were not able to build a connect between our belief versus the reality, and that is what AR VR does. Augmented
Mm.
reality and virtual reality brings in, or it maps your mind from what you want to what it shows you. So if I want, let's say, somebody to dance for me, augmented reality can make it happen with at no spends, and that's exactly the way the industry is moving. So it typically moves from your external atmosphere into your internal atmosphere and starts mapping. To cover up all these things, there are massive leaks that happen in this entire ecosystem, and hence comes the element of cybersecurity. So with an entire digital ecosystem evolving, there is a massive growth in the cybersecurity all the way from voiceless to passwordless communication to building in checks and bots to building in crawls to supervise to build in layered transaction interfaces to build in verification protocols to make sure that this entire ecosystem, that technology ecosystem that is being built, is safeguarded.
Mm.
Technology became overloading in terms of its ability, and hence businesses started to build in a lot of cloud computing. Cloud computing moved to the next level of edge computing, which is where today businesses operate. How is it that businesses like Amazon and Azure might have moved or taken the entire business from locations, desktops, servers, and sensitivities to an entire cloud or entire virtual network, which is accessible, fungible, and reduce the entire gap? What we see today in terms of Zoom is a very advanced version of a very basic cloud communication, cloud computing platform. But that's where businesses are moving. Last is process automation. Process automation happened through mechanization, but today process automation is happening through robotics. The simplest is
Mm.
evaluating your answer sheets in an examination is also robotics. Robotics has moved from as simple as OCR into performing very complex surgeries and putting aircrafts on autopilot, or even nuclear fission experiments are done on a robotic platform. So that's where the technology seems to be moving. It is difficult to comprehend and understand technology as a mother of all, and hence it's best to break it into data, Internet of Things, or digital ecosystems, bring it into robotics or automation as a technology. Its use cases in telecommunications, its use cases in healthcare, its use cases in insurance, its use cases in business, and all of this is being governed by massive AI and ML engines that drive what human beings can do without involving human beings. So that's how I sum up the entire technological landscape. What excites me in this entire landscape, if I were to answer, obviously the AI ML space, the AR VR space. IoT does to a certain level, but IoT is a very technology and very capital intensive process. And it is not a
Mm.
small boys club any longer. IoT requires multiple advanced algorithms that small businesses or startups might find it very difficult to go into. But cybersecurity is a startup's darling these days, because everybody who's able to build in a secure network, even in their own locational spaces, is is finding success. But amongst this entire ecosystem, what drives massive traction is geolocalization.
Mm.
Everybody is trying to build technology at a very global level. Can you build me geolocalized technology? Can I sit with you in Kuala Lumpur and find out and consolidate everything in Kuala Lumpur, all the way from my ecosystem, my social, my banking, my financial, my Internet of Things, everything into one complex web interface or digital interface that helps me conduct transaction as well as absorb information? That is where the industry seems to be moving. So that's my 2 cents on the entire technology piece, Terence.
Mm. I think that's a great way to kind of bucket all of it and put it into a framework to kind of look at as well. And you're right. I think in this connected world, it's good for some of the businesses to also pay attention to perhaps some of the countries or some of the companies or some of the regions that are leading this charge itself. So I think this next question is to you, Tushar. You've mentioned earlier Reliance making heavy investments as well. Uh, do we see India or that region, the whole Southeast Asian region almost leading the way, or are we looking at other countries as well in particular?
Uh, we have the consumers. When we talk about Asia or Middle East or Southeast Asia, or the Asian piece includes China, then we are the recently the deal which was signed, free trade zone, RCEP. We are talking about almost 35% of the world population and more than 50% of GDP. So this region definitely has a technological edge, also in terms of the quality of education and the engineers and so on. For me, Reliance Jio I mentioned because it was a sector. Telecommunication was a sector with 11 to 12 players and all of them bleeding. And there came a company which within a matter of 4 or 5 years became the leader, and also that company was instrumental in the internet penetration of the whole country. So I mean, we talked about uh, almost 90% reduction in data tariffs, which resulted in millions of people adopting Wi-Fi and having internet access on the mobile. So, if I explain what Reliance Jio did on the investment side, it took investments from Google, Facebook, Qualcomm, from Abu Dhabi Investment Authority, from Mubadala, and such type of investors which typically are look out only for very marquee deals. So what Reliance did was that suppose we define the consumer tech stack in four ways. The lowest is the telecom company, which is like Vodafone or Verizon. Then the devices like iPhone and Samsung. Over it, the operating system, Android or iOS or some other. And last, the product or the service, which are the apps. So Amazon, Netflix. The higher you go in the stack, it is better for you because it gives you purchasing power. It gives you access to the consumer directly. You can take money directly from the consumer's wallet via subscriptions or through advertisements. So, essentially the attention of the consumer. And the more higher you go in the stack, the more room you have to move sideways, more consumer apps can be created for different use cases. The lower you are in the stack, you struggle to differentiate, because if you are taking a telecom company's service, generally you feel that all are the same. It's a matter of one brand or the other, and there is a low margin play. So, device original equipment manufacturers, they don't have much to differentiate. So, the more layers you own in the stack, it is better. So, like Xiaomi has its own app store, and mostly what happens is that all these players within the stack, they work together and fight with each other to control the consumer. Uh, the worst part is that it sucks to be a telecom company, because you can't differentiate, and your pricing power is low, and you are only controlling the data pipeline, nothing more. So others, they make the money, and you just supply data. So a lot of companies, which were at the top of the stack, they tried to go lower, and a lot of companies which were in the lower in the stack, they tried to go higher. So Verizon acquired Yahoo, and it also acquired AOL, and it merged AOL and Yahoo, but the outcome was not good. It had to take a write down of $4.6 billion. Similarly, here in India, Airtel built a music service called Wink, and also built Hike, but it not had much success. Now, Amazon, it tried to go from top to bottom. It started its own operating system by the name Fire. It came out with products like Fire Phone and Kindle. On Fire Phone, it had to take a write down of $170 million. But it definitely had some success with the Fire Stick and Alexa. Google has also been not successful in the devices layer. So if you move up and down, generally your finding success is difficult, because you need dollops of cash and proprietary technology to ace the each piece. Now, what Geo did was, Geo created an entire stack. It created Reliance Geo, which is a telecom company. It killed all competitors. It created a Geo phone, which is a feature phone, not a smartphone, but millions of people bought it. It wanted to create an operating system. So instead of creating the operating system, it took billions of dollars of investment from Google and started using the Android system. It created GeoMeet and GeoChat, which are apps. So Geo selected the investors very carefully. Facebook was selected because it has apps like WhatsApp and Instagram. And it went one layer above and one layer below. Like it selected Microsoft. Microsoft has put in billions of dollars. It is partnering with Geo for the cloud business. So that is it. So Geo added one layer above and one layer below. The layer above which was added was cloud. The layer below which was added was that Geo took investment from Qualcomm, and Qualcomm is building a 5G gear, the telecom gear, the technology. It took, apart from that, it took investment from Google for the Android and Facebook for WhatsApp and Insta, Microsoft for cloud infrastructure, and Qualcomm for the 5G gear. So essentially, it has created such a strong moat, such a strong wall around the whole empire that it is very difficult for any competitor to barge in and do something about it.
I think you're right there as well. It seems very strong. And you're right on the consumerism part. I think we do have the numbers to back. Karthik, this next one's for you. You mentioned earlier very nicely on how you arrange them as well in terms of the technologies itself. Let's talk about some capabilities that you're seeing. Who are lagging and who are leading the way? Could you comment on that?
So I would start from what Tushar was talking, and I silo the technology competencies or still bases the classical route of the hardware versus the software, and it always would be the truck maker syndrome that Harley Davidson faced. They could build amazing bikes, but they could never get the cars and the trucks right. You shouldn't get into what you're not built for. So if an Amazon tries to build an operating system and tries into the hardware space, they do not have the technology bandwidth and the understanding. The same way Google's been trying to be in that space for a while. But if I were to block this down into where the competencies are coming in, we would not look at technology, but let's invert the entire pyramid and look at where the consumption of technologies is coming in, because that is the easier way to understand. So let's say telecommunication. Telecommunication continues to be the harbinger and incubator both of technology. You start right from your AI/ML capabilities to segment your customers and understand the usage patterns. You get into quantum computing and geolocational understanding to try and pinpoint your tower strengths and your complex algorithms. You get into geolocation to even understand your consumer segmentation and your billing strength from a particular location. So you start benchmarking your average revenue per user in terms of what dollars I'm going to get into. And then you bring the mother of all, which is the 5G technology, because that is where you're democratizing data. Data in this part of the world used to be around 100 dirhams for 10 GB. Today, it's about just about a dirham per GB, and that's where we have reached. So now, with that being democratized, it's only because of the technology being built in. So while that continues to be the harbinger of technology, the other big boy in the business is healthcare. Healthcare always used to be about medical and about surgery, but that is a very small element of the business. Robotics has done a beautiful job of that. We keep talking about telemedicine every time, but the entire healthcare spectrums change with AI/ML, bringing in the entire control over the supply chain of medicines to a level, incorporating blockchain to a level where you are able to stereotype and nomenclate a medicine to make sure the counterfeits are kept out of the business. Your insurance industry has developed to such a level from data in terms of predictive algorithms. Quantum computing this time around, as well as AI/ML, made sure that Africa could be safeguarded from a pandemic like coronavirus just by building layers and layers of bubbles and chains around populations to make sure that people are quarantined in the right manner. Now, all of this is outcome of technology. So who's using it and who's building it are very different. But the boys who are building it are necessarily deploying it and democratizing it for users to use at a lower cost. The guys who are in the physical or the hardware technology space work on what we call as an optimum pricing and price screaming logic to make sure that an iPhone 12 comes at around $1,200, and then by the time the iPhone 13 is in the market, it skims down to around $700. So just to make sure that you have that much more reason and you depreciate in your mind logically that you're going to spend another $700, $800 to buy a new phone. That's how the technology democratization works. But in terms of where the dollars are coming in, still the dollars are coming in from private equities and venture funds, because not a lot of companies, while they've shown promises in technology, not a lot of companies have been able to commercialize technology to a level where dollars can be generated. Google, Alphabet, Amazon, Oracle, Windows are examples of large boxes who have, I wouldn't say monopolize, it's a very wrong word to use, but they have homed technology. But they support and allied technology silos of venture capital led businesses, startups, small and medium enterprises, tech suites companies. They are still in that space of finding either the right buyer or the right conglomerate to associate with into an ecosystem. So the space is still in what we call as a consolidation phase across the board. It's not just about in one, be it technology in automotive, be it technology in consumers, be it technology in e-commerce, be it technology in telecom, be it technology in health and insurance, or be it technology in fintech. Everywhere, it's the end user who buys the technology and integrates into their operating network. So if it's a fintech, the companies at the end of the day either integrate or buy rights of a particular financial technology platform, and then they buy, considering if I'm a Visa, I'm going to buy a cybersecurity platform to make sure that my entire Visa network is protected. So here comes the technology into me and I start owning the technology. So what starts at a grassroots level ultimately ends up being associated with a large end user as either a captive or a domain-led purchase.
Right. I think you're right in saying that as well, Karthik, and I'm sure we spoke about it on other shows as well. I mean, telehealth, quantum computing, even agriculture, how new tech is really coming in and helping out. And kind of leading to that as well, Tushar, maybe this one is for you. What type of deals have you seen in this tech space, like say maybe the last 6 months, 3 months? Could you tell us a little bit on what you see and what you're noticing?
Sure. Thanks, Terence. The deals, okay, this might seem a bit jumbled up, so I'm just gonna take them one by one. So, on the psychology side, using technology, we have seen deals like the app Calm, which became a blockbuster. So, people are sitting at home, and many of them are not used to sitting at home, especially the children. So, there are startups around child psychology using technology, and also happiness programs and so on. A very interesting company which came to me from Gurgaon is a company which has created 4 types of robos. So these robos, one of them is for education technology, one is for food delivery. They have use cases in the sense that Brookfield, PricewaterhouseCoopers, the media company Viacom18, they have bought these robos. One can see these robos in Delhi airport as well in Vistara Lounge. And they have also created another robo for scavenging. So the Supreme Court of India recently banned manual scavenging. So they have created a robo for robotic scavenging. So it is such a beautiful invention at the right time. Similarly, as Karthik said, cloud security is growing at 25% CAGR. There is a cloud security company which we are talking to of late. This sector is likely to grow from $7 billion to almost $38 billion by 2027. We have companies like aggregator of health services. A lot of health tech is coming. This company came, which is aggregating all the diagnostic labs. And then there are aggregators for a variety of services like wealth management firms, for on-demand services, for instructor-led trainings for corporates, and an aggregator for organic products. Then a lot of companies are taking example of the success of Reliance Retail, and they want to bring retailers online. So on the inventory side, on the aggregation of micro retailer side, on the managing the whole delivery piece side, there are a lot of tech companies around that theme. In education technology, it's like a storm. I mean, we are talking about. I'm talking about seeing almost 14 companies a week. So two companies a day. I mean, there are companies which are about content. They are standardizing classroom exams. They're using data analysis to build more focused content for the students. One very interesting company came to me. They were venture builders. So they were trying something very different. So in case there is a certain theme which is doing very well with investors like health tech, ed tech, fintech, agri tech, so they will create similar type of companies, get co-founders, and keep the tech part, the focus on the tech part. Similarly, the space agency of the Indian government is ISRO. ISRO does a very good job, but it had a monopoly over many of the parts of space tech. That monopoly has been taken away by the Indian government. So we are seeing a lot of space tech companies as well. On the stock markets are booming globally. The Indian stock market is also at a lifetime high. So a lot of wealth management, fintech. Then there is a company which is doing a Dream 11 kind of success story for stock markets. Uh, on the drone side, we have GIS companies, drones which can do afforestation and so on. So happy to discuss more subsequently.
So in essence, there's quite a lot of investments coming in as well. Karthik, on your side, could you tell us a little bit on the type of deals that you see? I mean, given the fact that you were talking earlier about AI, ML, AVR, let's talk about that segment and what deals and investments are you seeing there?
So we're seeing two different kinds of deal spaces. Now, AIML deals in health tech is something that we've been seeing for a very long time. AIML deals in e-commerce is something that we've started seeing. AIML deals specifically around the recommender engine, which seems to have become a darling of all the e-commerce businesses of late, is drawing a lot of interest, especially that it reduces your cost of acquisition, increases your average revenue per user. So that's something that's coming in very heavily. AIML in insurance is a very, very raw and a very, very new subject because that needs to be layered with blockchain. The moment you bring in an element of blockchain, you decentralize a patient's record, then you build algorithms on it to draw predictive logic of what is the consumption or insurance consumption that the person's going to do. So insurance companies work on that. Telecom companies seeing a lot of AIML. So what we see in the AIML space is a lot of statisticians and people who have come and learned through the mathematical route in businesses or through the inventory route in businesses are setting up small startups. They come up with algorithms or macros and then they want to commercialize it. The advantage with an AIML led startup is that until unless you start getting into layers of blockchain and layers of content computing onto it, it becomes a very low cost startup. So sometimes it can be set up with as little as $150,000 as well. So you see a lot of interest coming in, interest from Asia, primarily interest from South Asia and India, very strong in AIML. AR/VR is a very graphic and a very, very content-led business. So until unless you have a captive audience or until unless you have a captive brand that wants to augment that business with AR/VR, startups wouldn't get into that space because creating a raw AR/VR and plugging a brand onto it is a very cumbersome project. And it really, you don't see that. You don't see that happening often. So the moment Coke goes out into the market and says that I want to do an AR/VR project in this space, it will create a mushroom of content creators, reality augmenters, content builders, and then all of them trying to put together on an ecosystem. So there are a lot of AR/VR startups, but all the AR/VR work, bulk of it happens in either Western Europe or it happens in subcontinent India. I haven't seen a lot of AR/VR startups. They are a little expensive in terms of the route to market. They typically are at 200,000 to 400,000. And if you want to take the AR/VR on an application and not at the human level, then you're talking about typically $1 million plus investment to get into that space. When you get into a slightly more cybersecurity, you see a lot of cybersecurity deals coming on the table from India, especially now with banking system being that much more controlled and that much more prone to vulnerabilities, passwordless engagements, two-layer automation or two-layer verification as we call it, your OTP-led generations or your layered discounting or your multi-device functionality cybersecurity. All of that is coming in primarily through India. So if you look at cybersecurity in fintech, it comes in through India. But if you again go to cybersecurity in health tech, that is something that continues to come in from Europe. Low cost startups, quick to hit the market, quick to commercialize, because the moment you come up with a cybersecurity solution, there will be 5 people who would want to buy and be the first one. It's like an antivirus. You necessarily need to have one. So there'll be people who would want to take and lap you up. The most expensive ones are typically the IoT and the robotics. I haven't seen a lot of robotics coming in. Even if robotics were to come in, they would come in at a process automators level. So a 3M would go into robotics, or a large hospital would go into robotics, or a Johnson Controls or a Merlon would go into robotics to make sure that their processes are optimized. So we don't see that, and we as a region don't even incubate these kind of startups. A lot of startups in the e-commerce space, Terence, but then it's the big fish versus the small fish philosophy. A lot of them get even eaten up too quickly, considering that the cash burn is very high. Telecommunications, I have startups who come in with solutions to telecommunication problem, which is what we call as that we would bring you algorithms that would help you increase your average revenue per user, or will give you vast value-added service platforms that would help your consumers draw more mileage out of your telecom, or a lot of loyalty indexing. A lot of loyalty indexing startups in the technology space is what we keep seeing, because it's the same consumer that everybody keeps chasing around the clock. So there are multiple deals on the table, but if you see in terms of indexing or priority, today's priority is edutech and health tech. If there is any, both of them from two different perspectives, and one of the key differentiators, at least that I bring to the VCs and the VCs on the table that we deal with, and family offices that we deal with, are primarily about democratizing a business with a human touch to it. So if it's all about capitalistic mindset and trying to multiply money, then we have a different route to that. But health tech and edutech is not just about commercializing, it's also about democratizing and making it available. And that's a need of the hour. So there are numerous deals on the table, primarily deals in what we call as pre-cooked stage. It's neither a seed nor a series A. It's in between, where somebody has started with a project and has just realized that there are far too many people in the foray, and hence I need to change gears and take up to the next level. I start the project thinking I'm the only one in this space. By the time reached halfway through, I realize there are 20 people doing the same thing. So I need to change gears, which means I need more money in the business. We see a lot of such startups. Route to finish, we peg on a success rate of just about 4.5 to 5%. Good enough for the current space and the current industry that we are in. We would be very bullish at 8 to 9% if we see success, and we'll be very, very happy with that. But we would put a stop losses at 4.5%, not more than 4.5%.
Great insights there. Thank you for that, Karthik. I'm sure the viewers are definitely taking notes. Going back to you, Tushar, I think earlier you brought up the Asian consumer story. So considering that the consumption story is very strong in Asia itself, what's your thoughts on consumer tech, perhaps?
So, Terence, we are talking about approximately a $3 trillion GDP of India. We're talking about approximately $3 trillion for Southeast Asia. And on top of that, $14 trillion for China. Although China's debt to GDP has crossed 350%. So that's another part. But because these economies are quite big, and especially on the India side, we are the third largest economy globally by purchasing power parity. China is number one. US is second. So, although our currency is weak, but by PPP, we are quite a big economy. And the biggest part of our economy is consumption. So that's why consumption story has always been very strong in India. And so what we have seen in consumer side is that there has been a shift in consumption patterns. So in packaged goods, the logistics side, some problems were there because of COVID. But a lot of funds out here, investors out here have kept money aside for their portfolio companies. And we believe that with the vaccines about to come out in the market, there will be a fresh blood to these consumer tech stories. So we have companies like direct to consumer companies. So a lot of companies, they were initially trying to pivot to direct to consumer before COVID, and then they realized that the consumer acquisition cost is pretty high. So they went back, and after COVID stuck, they went back again to the D2C story. So telehealth is one, and especially around the stickiness of smartphone. There are a lot of consumer tech companies.
Yeah, I think you're right and on point on that as well. But again, as we know, gentlemen, lots of businesses watching us today perhaps are in that early stage of funding. And again, these are entrepreneurs coming up. And when they look at the current technology, the communications, and the industry that we're talking about today, most of them, I think, kind of want to know how do they succeed in this era. So as this as a service mindset that we see with most businesses coming out as well. Karthik, could you give some advice to the companies?
I have a special message in this space, Terence, primarily because I would have met or evaluated at least 72 theses in last 45 to 50 days. And I keep account of my thesis as well. And my challenge is a lot of startups, typically early startups, which are to be 3 people, 4 people, 5 people, they love to get to, and it's very flamboyant to be in a startup space and to tell the world that I am getting into a startup and I'm going to raise funds. But it is equally important to know where you're heading, why you're there. And everybody in the business seems to know two things, Terence. Why do you want to go, and what do you want to, where do you want to go? A lot of people don't understand how do you need to go, and until you don't know how you're going to go there, no VC is going to put money on the table for you any longer. Gone are the days when VCs would get stimulated with an idea, because today ideas are dime a dozen. Everybody has an idea. One needs to come onto the table with a very strong execution plan, and not only a very strong execution plan. More often than not, in last 8-10 years of investments in technology, we have noticed, Terence, that things go wrong often, and things would definitely go wrong often. So one needs to understand how strong a metal do you carry, how strong a head do you bring to the table. Do you have a plan B? Do you have a business continuity paradigm in your head that if things go wrong, how am I going to do a course correction? At what stage do you want to commercialize your technology? At what stage? And that technology commercialization doesn't come in from a dollar value point of view or to give an investor an exit. It comes in from making your idea into a reality and scaling it up to a level where it becomes a phenomenon. If you go into a market with a mindset that I want to incubate technology and I want to sell it at 4x, 5x, 6x multiples, you're setting yourself for a failure, and you're setting a VC up for failure. Because while in your mind you think that a VC's money at 4x multiple is amazing, the gentleman on the table might be leaving a 20x multiplier with a very passionate venture fund who could have done better and invested money into you at a 4x with a risk that the business might be sinking in. So if your vision itself is very narrow and you do not come to the table with a conviction of scaling, and you do not have a scale in mind, but you only building it to sell, then it's like breeding to slaughter. That's the we call it breeding to slaughter in the business. If you breed to slaughter, then you're setting up an entire business and the ecosystem for failure. Second, the businesses have become very smart, and so have the VCs. In the past, dollars were invested, millions of dollars were parked with businesses with a belief that, okay, go and fend for yourself. Today, and I continue telling this on your show, Terence, is that VCs have become a little smarter. It's not always about the dollars on the table. Now, if you want a startup incubator, I have a startup incubator. You require technology, I have technology. You require office, I have office. You require developers and web space, I have a developers and web space. Come and use my space. I'll incubate your startup, and then I'll take a part in your commercialization story as and when I need to. So the proof of concept, I need to see the proof of concept to believe that your technology, your scale, your logic is something that is going into the market. And technology otherwise is an omnibus. It is such a distractive space. And the pace at which it evolves, if you do not begin with the end in mind, you suddenly would lose track and would become a completely, I would say, an open-ended ecosystem, which means everybody's money is sunk and everybody's time is wasted. So it's very important for startups to have begin with the end in mind and be very, very focused about where they're taking the technology to.
Mm, I see. That's great actually. And continuing off with that one as well, Tushar, what's your advice on this? How do we succeed in this era for startups, of course?
Uh, I take example of the FANGs, the top tech companies, Facebook, Amazon, Netflix, and Google, and so on. Look at Amazon. I mean, in India itself, its business is more than 40% up. So a company which was formed almost 26 years ago, it took 1.5 years from being a $1 trillion company to being a $2 trillion company. So although when we are in this space, then we tend to see the big successes, and it somewhere it obstructs our mind because we are unable to see the micro. But the trend is there to see that what a company which can successfully leverage technology, what it can become. Uh, I have seen companies recently, which I would like to talk about. There is a company which is gamifying education. So, the children today, they are sitting at home, they get the same online classes, they are pretty bored with the delivery. So, some sense of gamification of the content will definitely get them interested more. Then digital marketing. I mean, we have seen what TikTok did. I mean, it became $100 billion out of nowhere because I was strolling in a park quite some time back and before COVID, and there were so many people, youngsters, taking videos, making videos, and it was amazing. So I asked them that the whole park is full of such kids. So they said it is for TikTok. So this has led to the rise of nano influencers. So similarly, there are companies in this space which are managing nano influencers and delivering advertisements through them. Then I'll take an example of a company like Intuit in India, which is like Shopify. It is a company which is providing credit management solution for small businesses, and it pivoted uh, to fintech side and providing, because it has access to database of small businesses. So it pivoted to even offering more kinds of services for those businesses. One more piece is regulation technology, RegTech. Now, people are sitting at home. They don't want to go to government offices to get clearances and compliances done. So, there are RegTech companies. There is one very beautiful company which is doing a good job here. Then there is a company, because the Indian legal system is a bit, not a bit, it's quite slow, and it's very costly to fight a legal battle. So arbitration is coming up. So if you look at all the corporates, their agreements, they are centered around arbitration, and arbitration has legal backing. And there is a timeline set in the arbitration law of completing the cases between 1 to 1.5 years, within 1 to 1.5 years. So there is a platform company which has come to us, which has brought in a lot of arbitrators and consumers. There are some red flags, though. I mean, recently I saw that there are some government companies in China which defaulted on their debt to their banks. These kinds of
Yeah.
things, they sometimes become black swan events. So I'm very keenly watching out. Then, of course, as Karthik said, the new strain of COVID in UK is a potential such a red flag. And although since 2008, we have seen that central banks globally have kept the liquidity tap open by printing more and more money. So we are likely to see that. But if there is a structural, fundamental problem like we saw with the Lehman Brothers in 2008, if there is some structural kind of issue, then definitely, nobody likes to catch a falling knife. And when the investors take exit, then valuations drop very suddenly, and it can impact all the asset classes, including the technology companies.
Right. And Karthik, over to you. I think you had an Internet Explorer story. Tell us about it.
So let me put this way. And what Tushar was talking about, the continuum in technology, I completely agree. A lot of startups lose steam halfway through the entire project, and I've seen so many startups lose steam. Unfortunately, it is the way the business operates. But I want to take you to the Internet Explorer story. $30 million, Terence,
Hmm.
72,000 man hours, and 400 professionals built the first edition of Internet Explorer, and the second edition of Internet Explorer was built in 12 seconds at $1. That's the first CD of Internet Explorer took them that long a time, and Internet Explorer 2 just came in 12 seconds. It didn't take them any time. So that is exactly how the technology industry and the space works. It takes you time and light years to come to the right idea. You need to be really persistent and consistent about it. And it goes back to the Enigma exploration or the Enigma story that was about the scientist trying to break the Enigma code, and then not Turing's Enigma code, and then he couldn't come up with it for 4 years, and then in 3 minutes he could break the code. That's how the entire technology paradox works. The biggest challenge that I see with a lot of startups, and startups coming in with people of my age as well, Terence, and I would like to draw a disclaimer here, I'm not too old, is
Us all, us all.
people do not bring in that level of patience and consistency. And when they build technology as a milestone and not continuum. One needs to be very clear in this space that technology will always be a continuum. What happens today versus what will happen tomorrow versus what will happen day after is completely different. So if you think that building a TV that talks to the light, that please dim the light and this is the end of technology, then no. Tomorrow, the light might want to connect with the TV and says that every time the TV switches off, the light would go on its own. That's the continuum that we are talking about. So one needs to make sure that you stay 2 steps, 3 steps, 4 steps ahead. The last piece that I want to talk about, and these are my real startup experiences, it might help with some startups, is don't come up to the table with contemporary technology. Don't come up to the table with one generation ahead technology. Come to the table with at least 3 generations ahead and 3 more generations planned ahead. So, for example, I live in a 4G era. If you come to me with a 5G solution, I'm sure there are millions of people who are already working on that. So, I wouldn't want to waste my dollars. I don't want to humiliate you or waste your time, but come to me with a 7th generation, 8th generation technology with a scale up plan up to 11th generation. If you have that, then you are a tech innovator. Otherwise, you are a tech multiplier. There's a difference between a tech innovator and a tech multiplier. A tech multiplier helps democratize and reduce the cost of technology. But a tech innovator really creates the technology and the valuation. In the valuation game, Terence, I would put all my dollars on a tech innovator because tech multiplier is about translating a book. Tech innovator is about writing a book. So we know where to put the dollars on. So these are some practical challenges I see with a lot of startups in this space.
Right. And that can be a good challenge for all the startups looking at us as well at the moment. Be that innovator instead of that multiplier, I guess. Go over to you, this one, Tushar. With the points that Karthik brought up as well, I mean, the question goes, what really does and does not account for business success, you think? Can you give out some examples and maybe some interesting companies that you've seen?
Yeah, but see, sometimes it is about a no-brainer, but people are still not able to see. I mean, a lot of movies and content shootings are not happening. So everything is happening virtually. So a lot of these celebrities, especially the second level and the third level, they are sitting idle. So there is a company which came to me, which is allowing you to get personalized wishes from these celebrities, and not one. I mean, 3-4 companies like that came in the last 6 months, and some of them are doing pretty nice. So also on fantasy gaming, some companies came up, and because Dream 11 became $1 billion company, so there has been a lot of interest with the techies in this space. There has been a little bit of dampener because the Chinese were investing a lot in the Indian equities, the unlisted ones. But the government had, put in some kind of a brakes over there, rightly so, because of the border issue. On the corporate training side, there is a company which is doing quite well, and it's delivering corporate trainings online. There is a company which is into mobility, although that is a bit dampened by COVID. Then on the procurement fulfillment side, I mean, because of COVID, one needs procurement's efficiency, and it can be done through technology. There is a company which is delivering pure organic products online. And one very interesting company came from Europe. I mean, so these ships, when they have to be anchored to the harbor, then it is used by tugboats, and tugboats use ropes.
Right.
Now, there is no technology which has typically been deployed there. So this company has created a small unmanned craft, which pushes the ships and anchors it on the harbor. So that was very interesting because this tugboat rope technology is almost 100 years old. So it was very nice to see someone doing some work in that space. Then there is a very interesting company here which has recently raised $4 million. It is pay on placement. So Indian education sector has been very government regulated, and because of that, a bit inefficient. So this company offers courses, takes little small amount of money, and the rest it takes only once it gets the proper jobs to those passing out. That was pretty, I mean, amazing to see. And there is a company which is trying to kill plastics by using organic industrial byproducts like dairy products and all, and converting them to create alternatives to plastic. Then there are some social commerce ones, rooftop solar, and so on.
Right. I think those are great examples as well. So, Karthik, this one also to you. Perhaps we have a few minutes left, and before we round up, just your thoughts again on what does and does not really account for that business success. What have you seen? Could you comment a little?
Scale,
Hmm.
democratizing, continuity, and meritocracy of technology would continue and would account for business success. Valuations is a very short term. Proof of interest or proof of development is a very short term. So I would look at, if a business has to be successful, I would need to see scale in it. I would need to see democratizing it and making it a far-fetched phenomenon rather than limiting it to a few. I would look at it at being a trend, of an innovation, a development, rather than just an adaptation in its own space. What I do not necessarily see as success is a valuation game. While I come from a venture funded businesses, but we look at, and we primarily look for businesses which come in with passion and which would come in with a zeal to succeed, backed by very strong evidence and empirical logics. We do not consider purely valuations as a route to market, and which is where the change is coming from. And I would really be very, very focused on that for at least next few years in this space.
Great piece of advice. And for those viewing as well from wherever you are, again, we have a few minutes left on the show, 2 minutes in fact, and we're going to sum things up. But before we do that, a little housekeeping as well. Remember, for you to reach the VCs that you see in front of you today, it can be arranged, it can be done. Of course, don't bombard them. We can help bridge that gap. So do contact us. All the links are below. Click like and subscribe. And of course, come back on the next show itself. This is VCTV by Latokan, and I'm going to go around for any last words. Tushar, sum it up for us. Any piece of advice and any plugs that you want to put?
So my advice is, whether it is COVID or the second strain or the Chinese, long-term trend is towards technology, and I liked the word democratizing technology, which Karthik uses so beautifully. Especially seeing a lot of impact companies as well here, and a lot of money around that theme as well. So I think at some point in time there would be technology to stop any kind of problems which have come because of technology. So we are reaching, probably that point will also come sometime in the future. And so the march is on.
Great, you're right. Karthik, last words from you before we leave.
Yeah, technology would evolve. Technology continues to change. Technology continues to fascinate us. Technology will always see investments, but one needs to really remember it's always the man behind the machine and not the machine that matters in the long run. So while technology will grow, it will always be an enabler for a significantly long-term time. And hence, one needs to see how does it gel well with the ecosystem. Are we growing the ecosystem and the society as a large? Because if the society and the ecosystem don't grow, there'll be technology, but there'll be very few users to use the technology. And that, to me, is a disaster. So I would always look at keeping a project and keeping a business in line with social growth and social ecosystems developing. And that's how I look at businesses. Thank you. Thank you for hosting us this afternoon, Terence. Always a pleasure, buddy.
Brilliant. I think
Thank you,
great
Terence.
points,
Thank you.
great insights. Thank you, Tusha. Thank you, Karthik. Come back the next time if you want to listen to this gentleman speak on next topics again. Thank you and have a great
Thanks.
day. Bye, everyone.